Hello, everyone, and welcome back to the Financial Freedom Show. If you're new here, I'd like to take a deep dive into ETFs and the world of investing. Today, we're going to dive deep into one of the most popular and widely recognized ETFs in the world, the SPY ETF. Whether you're an experienced investor or you're just getting started, you've probably heard of SPY. It's often recognized as a core holding for any portfolio, offering a broad exposure to the US stock market. But what exactly makes SPY so special, and is it the right choice for you? Stick around because we're about to break it all down. Let's start with the basics. What exactly is the SPY ETF? Officially known as the SPDR S&P 500 ETF Trust, SPY was launched back in 1993, making it the first ever exchange-traded fund in the US. Its primary goal? To track the performance of the S&P 500 index, which is composed of 500 of the largest publicly traded companies in the United States. By holding SPY, you're essentially buying a slice of the entire US large cap market. This means that you get exposure to some of the biggest and most influential companies in the world across a wide range of sectors. It's like owning a piece of the American economy all in one fund. SPY is structured as an investment trust, which means that it's different from how most ETFs are set up today. It means that it has certain rules and restrictions, like not reinvesting the dividends back into the fund, which we'll get into later. But overall, its mission is simple: to replicate the performance of the S&P 500 as closely as possible. So why do so many investors flock to SPY? There are many key reasons. First and foremost, its broad market exposure. By investing in SPY, you're getting an instant diversification across 500 of the largest US companies, from tech giants to healthcare leaders to consumer staples. This helps spread out your risk as you're not only overly dependent on one sector or company. Another reason for SPY's popularity is its long track record. SPY has been around for over 30 years, and during that time it's delivered solid returns, closely mirroring the performance of the S&P 500. This consistency makes it a reliable option for investors who want to build wealth over the long term. Liquidity is another big advantage. SPY is one of the most heavily traded ETFs in the world, with billions of dollars worth of shares changing hands every day. This means that you can buy and sell SPY quickly and easily with tight bid-ask spreads that minimize your trading costs. Let's not forget about costs. SPY has an expense ratio of just 0.09%, making it extremely cost-effective to gain exposure of the US stock market. While there are other ETFs that track the S&P 500 with slightly lower fees, SPY's low cost combined with its liquidity and track record make it a compelling choice to many investors. Now that we've covered what SPY is and why it's popular, let's talk about how you can fit it into your investment strategy. SPY is often considered a core holding, meaning it can serve as the foundation of your portfolio. Its broad market exposure and diversification make it the ideal choice for investors who want to build a strong, stable base. SPY is also versatile. It can be used in a variety of different strategies, whether you're a long-term buy and hold investor looking to dollar cost average over time, or even a more active trader that wants to capture short-term market movements. Because it's so liquid, SPY is a favorite for both institutional investors and retail traders alike. Another important reason to consider SPY is its income. While SPY isn't specifically designed for income generation, it does pay dividends based on the underlying stocks in the S&P 500. These dividends are distributed quarterly and can provide a nice little boost of income, especially for those who reinvest them over time. Of course, no investment is without its risks, and SPY is no exception. When it offers broad market exposure, it's still subject to the ups and the downs of the stock market. If the US economy enters a recession or if the market conditions deteriorate, SPY's value will likely decline alongside the S&P 500. Another consideration is that while SPY is diversified across many sectors, It's still heavily weighted towards large cap stocks, especially in the tech sector. As of currently, tech companies like Apple, Nvidia, Microsoft, and Amazon make up a very significant portion of the fund. This means that SPY's performance is somewhat tied to the fortunes of these companies and the tech sector as well. Now let's not forget about inflation. While SPY has historically outpaced inflation over time, there can also be periods where inflation erodes purchasing power faster than SPY's returns. In such times, you might want to consider complementing SPY with other assets like bonds, real estate, or commodities to protect against inflation. So is SPY a good buy right now? It really depends on your investment goals and time horizon. If you're looking for a low-cost, liquid, and diversified way to gain exposure to the US stock market, SPY is hard to beat. It's a solid choice for long-term investors who want to build wealth over time. However, it's also important to consider the current market environment. With interest rates, inflation, and economic growth all playing a role, SPY's performance may be influenced by these factors in the short to medium term. If you're concerned about a potential market downturn, you might want to gradually build your position in SPY through dollar cost averaging, or consider pairing it with other investments that can provide more stability. Ultimately, SPY remains a cornerstone for many portfolios, but as always, it's crucial to ensure it aligns with your specific investment objectives and risk tolerance. In conclusion, the SPY ETF is a tried and true investment that offers broad exposure to the US stock market with low costs and high liquidity. It's a versatile tool that can help serve as the foundation of a well-diversified portfolio or complement other investments. But like with any investment, it's important to understand the risks and ensure that it fits well with your overall investment strategy. Thanks for watching. If you found this video helpful, please be sure to give it a thumbs up and consider subscribing to the channel for more insights on ETFs, investment strategies, and financial planning. Have any questions about SPY or any other ETFs? Feel free to drop them in the comments down below. I'd love to hear from you. See you in the next video.